Okay, so the market bounced today. Let's first of all cover some basics and understand why the market bounced today. As the market was going down, it makes sense that there are certain investors who are going to short a number of stocks. That is to say, they're betting that the price is going down. Once the price goes down on your short, you need to cover your short. And that is to say that the broker who sold you the short position has to have a long position in the stock. So when you see a drop of 2,000 points on the Dow, the next day there is always going to be a bounce because the shorts are being covered. And that's what you saw this morning. Now, some of that was also, I'm sorry to say, the amateurs who didn't know what I just told you, thinking, well, that's the bottom. No, that is not the bottom. And please don't think that it is the bottom. Understand how the market works. 87% of our economy is driven by the consumer. Recognize the consumer is being told to go home and stay in your house. So they aren't going to lunch. They aren't driving their automobiles. They aren't going to conventions. They aren't holding sales meetings. If you watch the news, you'll see that small businesses are suffering right now because the consumer is not spending his money. In order for me to make money, someone has to spend money. And if they don't spend money, I don't make money. That's about as simple as you can make it. If the consumer is not in the market or in purchasing, the economy slows down. So we have just started seeing people getting out of the economy. My grandson informed me that his school in Atlanta is closed indefinitely. My granddaughter, who goes to Savannah School of Art and Design, just wrote me and told me that her school is closed through May. And they're closing down the dormitories, and they're going to offer some classes over the internet. People, this is a tipping point. We are learning we can live without the way we've been doing it in the past. We don't need those dormitories. We don't need those schools. I was in Office Depot today getting something scanned. And I was talking to a young man, and he was buying some office materials. And I asked him why he was doing that. And he said, because I've been told by my company, one of the major banks here in Birmingham, to go home. And I would be home for at least through the end of the month. I wouldn't want to be in commercial real estate right now, because there's a lot of office buildings who are going to realize they don't need all the space that they have right now. We are, as I said in my last video, you might have seen that the Fed interjected $1.5 trillion into the market last night. And that was at the repo market because people were wanting cash. They were wanting to turn in their treasury. Why are they wanting to turn their treasuries into cash? The big part is fear. Look at the VIX. The VIX is somewhere right now between 60 and 70. Maybe last time I looked, like 67.5. That normally, when the market is functioning normally, that's down around 30. The last time the VIX has been this high was when Lehman Brothers failed. So there's tremendous fear in the market. There is tremendous fear that people want cash so that if they get in a bind and they can't pay their mortgage, they've got money to pay their mortgage. If they're going to get laid off and they can't make their car payment, they have cash. So there is a need for liquidity in the market, and it's not there. That's why the Fed put that in. Folks, it's not over yet. Now, an interesting question that I have is that we have companies at real extremes now. I did a video about zombie companies, the companies that are operating purely to pay the interest on their loans. One of these is Tesla. Uber, Lyft, Airbnb. They have borrowed money to continue the running of their companies. They aren't borrowing it at the treasury rate. They're buying it or borrowing it at the junk bond rate. I don't know where that is. That can be up around 8-10%. So they're in trouble now because their business is slowing down. Take the car business. China says that their sales last month was down 90%. The United States is going to go into the same position as this virus moves through the United States, and we have not positioned ourselves as well as China to bring it under control. We have many hospitals that right now are being taxed by the fear concept. I got a runny nose. I got a headache. I better get to the doctor and find out if I've got the fever. Wait a second. The hospital doesn't have the test kits. The fear level goes up higher. So we need to recognize this is not over yet. As I was saying, the other thing that then becomes interesting to me is who's going to buy who. And I'm not talking about you buying a stock. I'm talking about the well-heeled companies, the people who have a heavy cash level on their balance sheet. And let's just focus on one of them. Run by Tim Cook, a small company by the name of Apple. They've got so damn much cash on their books. I gotta believe they're sitting in a meeting as we speak and saying, who do we want to buy? Do we want to buy an airlines? They're as cheap as they've ever been. Do we want to buy a cruise line? I don't think so. How about, do we want to get into the automobile business? Ford's way down right now. Might that be, if I'm Google and I want to get into the autonomous automobile business, like I know they do, and they want to all of a sudden go from just experimenting in it to owning the factories and the ability to produce them. What about Volkswagen, the largest car company in the United States? You think maybe they're meeting and asking themselves, who do we want to buy? I know a real cheap buy right now, General Electric. Again, think about how the market works. Now, what I don't want you to do is try to catch a falling knife. This was something when I was in the financial planning business, and when we were in the dot-com bubble, and then when we were in the subprime crisis, we saw the market falling, and everybody was saying, let's catch that as it's falling. Let's buy in. That's trying to catch a falling knife. You got a 99% chance that you're going to get hurt. So what I would encourage you to do as an investor is, first of all, create a list of companies that you would like to own, that you think are going to change the way you live the next 10 years. And then say, okay, if this virus is going to be an effect on the market for, let's say, the next 6 months, if I could buy that company at X dollars, and I believe it will, by the end of the year, get back to its high, would I be okay with that? And then ask yourself, if I bought it, let's say, at a 20% down, and then it went to 35% down, certainly I would have rather bought it at the 35% down, but would I still be okay if I bought it at a 20% down and I made 20% on my money by the end of the year? You're not trying to catch the falling knife. You're setting your expectations and you're managing your purchases. And that's how I want you to approach this. Something I'm going to do this weekend. I'm all cash right now. I just bought a lot that I'm going to build a house on, but other than that, I'm all cash. I'm going to put together a plan for me as to how I'm going to allocate my funds in the coming weeks, and how I'm going to either dollar cost average them or buy all in. I'll use the theory I said, and one of them is going to be Amazon. I had said before I would buy it at 1,700, and I could have bought it yesterday at 1,700, but I didn't because I think it's going to go lower. I'm going to decide that, okay, I want to buy Amazon at whatever. Let's say it's 1,600. And I would be good with a $400 profit because I do believe once this is all gone, Amazon will go back up to 2,000. So I'm going to put together that plan, and I'm going to put together the plan of how I'm going to do it, whether I'm going to dollar cost average or whether I'm going to buy it. I want to share that with you, but I will not do it on this video. I will do it. I am going to set up a mailing, where you can give me your email address, and then I will send you privately through email what my plans are. And I'll continue to do that as we get deeper into this. At this point, I'm not going to charge anything for that. It's going to be just, we're going to build a tribe of smart investors, of investors who understand what I explained to you about the short covering earlier. Because you shouldn't be, if you didn't know that, you need to know you don't understand the stock market. And if you're going to play this game, you need to understand it. And that's what I'm going to share with you. And that's, I've got years, read my bio, you'll understand. This is what I'm willing to do for you. So if you want to be a part of that, that'll be in probably one of the next 2-3 videos I put out. Be prepared to do that. But first of all, subscribe to my channel and ring the bell and like the video. I got a comment the other day, why are there so few subscribers to your video? Because I'm just building this, folks. I just got it monetized, 35 days ago. So we're just building this. We're going to build the best of us millionaire investors, and it's going to be you and me, and we're going to exchange information, and we're going to learn what the game we're playing so that we aren't victims